Today we're talking about 1031 tax deferred exchanges. A 1031 exchange does not cancel out your taxes, it just defers your taxes later. It's just kicking the can down the road. So what are some things and what are some situations that we might want to think about using a tax deferred exchange? If you're selling your property, your farm, your investment property, and want to put it back into another investment property, it may make a lot of sense to use that 1031 to defer those gains, especially if you've got a low basis in your farm. You bought it several years ago, the prices went up quite a bit, so you're going to be looking at a lot of capital gains tax. I would always advise you to talk to your CPA before you do anything. But the advantages of a 1031 tax deferred exchange is it allows you to put all of the contributions that you get out of your gain from the property you're selling into another property, and allows you to hopefully go buy something larger, more expensive. Maybe it has more improvements on it. It's an upgrade from what you currently have. So a lot of guys, and this is a good way to start, they'll start with a small property and they'll continue to roll that property. They start with a 50, then they go to 100, then they buy 200, then they buy 400, and you can continuously defer that gain. Not suggesting that you do that, because that gain starts to snowball on you, and at some point you're going to have to pay the government. But talk to your CPA about a tax deferred 1031 exchange. Get the details. We've got people that do 1031 exchanges for a living. That's all they do. So if you need help, give me a call.